Good afternoon and welcome to the One Health Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Derek Bickerstaff, Chairman. Good afternoon to you, sir.
Hello everyone. Thank you for attending today. We plan to do a general overall presentation of the One Health Group, but then also present our 6-month interim figures. So just a word of introduction, really. My name is Derek Bickerstaff. I am the chairman and founder of the company. I founded the company some 20 years ago and had a long career as an orthopedic surgeon and knee surgeon. One Health Group was founded in 2004. By 2015, I've grown the company as far as I could personally running it, and therefore we took a view to go for strategic growth, and therefore brought in Adam to set up his management team to go for growth. So over to you, Adam.
Good afternoon. Yeah, my name's Adam Binns. I'm the Chief Executive of One Health Group PLC. I joined the business almost 6 years ago now. Originally as project director to look at building a facility, and then going on from that as finance director, becoming CEO in July 2019. My background isn't healthcare. I've done logistics, manufacturing and retail in the past, but I think there's many transferable skills which I've applied to this business to good effect. The driver for me over the past 6 years has been really structuring the business to be more corporate, building on the work that Derek had done previously. And that certainly helped a lot when we listed the business last November. Back to you, Derek.
Okay, so a bit about One Health to start off with. As I said, One Health was established nearly 20 years ago, and almost a year ago to the day, we listed on the Apex segment of the Aquis Stock Exchange. Basically, One Health is part of the delivery chain to the NHS, and all our customers do not pay a penny at the point of delivery as per the NHS constitution. So we get paid by the NHS, by commissioners who commission our work. So fundamentally, we receive referrals directly from the GP or from trust hospitals that we work with to help them manage their waiting lists. So the patients are referred to us, and then they are seen by our subspecialist surgeons, and we see them in community clinics over a wide area in the north of England and the Midlands. The type of elective surgery that we cover is orthopedics, spinal surgery, general surgery, and gynecology, and that accounts for the majority of the huge waiting list that we have at the minute in this country, with nearly 8 million people waiting to be seen. So our patients are seen in our peripheral clinics. If they require surgery, then we bring them to, at the present, 7 independent sector hospitals, where we have arrangements with the hospitals to operate on the patients, and then the patients are then seen back out in the community where they undergo their rehabilitation. So we've tried to flip the provision of healthcare on its head, where we take the subspecialist surgeons out into the community and only bring them into central hubs for surgery when required. So as much of the work is out in the community. So basically, we own the whole pathway of care from referral right the way through to discharge. And with waiting list standing as 8 million presently, or nearly 8 million, we're seeing a steady increase, a steady demand for our services, which are reflected in the figures that we'll be presenting a little bit later. So the NHS, as we know, is increasingly reliant upon the independent sector to provide care. So, One Health is an established company. We're asset light. We don't own any. We don't have any assets other than our head office. We subcontract independent sector hospitals to do operating. We subcontract clinics, and all but one of our surgeons are all subcontracted. So we're asset light and cash rich. So just a bit on numbers, and we'll delve into these a little bit more later on in the presentation. But roughly each year, One Health sees 12,000 new patients. We undertake about 6,000 operations, and we have about 30,000 consultation, which includes follow-up consultations. We have over 100 NHS surgeons and anaesthetists working over a wide area. Yorkshire Derbyshire, Nottinghamshire, Leicestershire, and Lincolnshire. We work in a number of clinics, as stated earlier, around about 30. Now, all these are CQC registered clinics. And the reason I want to raise that is that everything we do is registered by the Care Quality Commission, and quite rightly so. To do so, however, requires a lot of infrastructure with regards to the fulfilling their regulatory requirements. And this is something that One Health has built up really over the last 10 to 15 years. Also, the contract we have is something called the Any Qualified Provider contract, which we achieved in 2011. Now, this allows us to receive patients to be referred to us by general practitioners from anywhere in the country. Now, we see them in our clinics in the north of England and the Midlands, but because of this contract, we have a very wide reach throughout England. And the important point about that contract is that that type of contract is now not available. And so the fact that we have a large infrastructure to deal with the regulatory requirements of the CQC, and we have this Any Qualified Provider status, that's a relative barrier to entry to other smaller groups. So as we'll see later in the presentation, at year end, we achieved our forecast of just over 20 million with 1.5 million of EBITDA. I'll just move that through to Adam.
Patient choice. Patient choice has been in place literally for almost a decade now. And what it means is that constitutionally, the patient has the right to choose who provides their treatment. Not as widely known as you would hope, and I'll come on to an advertising campaign recently to promote that. But in simplistic terms, if a patient attends a GP and then is required to be referred on to a consultant, they should be given the choice by a combination of location and speed of service. So, as Drake's touched on briefly, the operating model for One Health is based on numerous outreach clinics, which, as the name suggests, are out in the community, which I'll come on to later and show you where they are. But also, we work really hard to minimise that lead time for both referrals and for inpatient activity. So we feature very highly on this kind of Google search with the GP. As a reminder, there's no cost to the patient. All the activity we carry out is fully funded by the NHS. We don't focus on private and self-pay. We are an NHS provider. That's key to the growth of One Health Group. It's also very important to realise that on a local basis where we operate, we are playing a significant part in reducing that waiting list. As Drake's touched on, nearly 8 million patients now waiting. We do a lot of work locally and across the regions we operate to reduce that list, with times from referral to inpatient of around 8 weeks compared to what can be 2 years for selected procedures in the NHS. On the right-hand side of that slide, that pie chart, I'm showing you basically the business model to gross margin level. So as an indication, a hip procedure funded by the NHS, we get paid £6,300. We then pay the surgeon per hip replaced. We pay the anaesthetist for helping that consultant, and then we pay a percentage of the tariff to the independent hospital we use to use that hospital capacity to carry out the procedure. That covers all costs of the procedure from an initial pre-assessment through to discharge. So that makes up the effectively gross margin of the business, and that's around 18% currently. And there's obviously options on that in the future with the development of surgical hubs, which I'll come on to. So in terms of the promotion of patient choice, you may or may not have seen in the printed and digital media in September, there was an NHS England funded promotion to let patients know they have a choice. Clearly that was right on half year for us, so we saw no immediate uptick in that activity since, but we're fairly confident more patients are now aware. This should be followed by a TV and radio campaign in December, which we hope to be benefiting from towards the second half of the year. So, in terms of why patients choose One Health Group, there are 3 key points on that slide I'd like to talk to you about. One is the short waiting times. So, as I mentioned previously, typically now, we're now at pre-pandemic levels of performance. So, an average wait time from GP referral to a first appointment with a One Health consultant is around 4 weeks, and around 6 to 10 weeks, depending on the specialty, for surgery if required. Around 40% of our new patients require surgery, an indication of conversion for you. The second bullet point in there, local to patients, again, is key to being attractive to the patient. Unlike the larger hospitals, where all activities are carried out in the hospital and the patient may travel 5 or 6 times, we focus in the community at the first point of contact, with all our consultants travelling into the community to our outreach clinics to meet the patients, making it very convenient for them. And then going down the bottom of that slide, patient liaison team. So the employed workforce in One Health Group is around 50. And that team who was sat in my head office today, where I'm basing myself, are responsible for the relationship management between the hospitals, the patient, the commissioners, and all the consultants and anaesthetists. They do a fantastic job of making sure the quality of care is really, really strong. And that goes right back to when Derek formed the business nearly 20 years ago. Customer care is at the heart of what we do. And going to the last one, in terms of the measurement of that quality, our feedback is excellent. I think I'm saying with a great degree of confidence, our patients receive private quality levels of service, but obviously it's free, funded by the NHS. We take great pride in that. In terms of our operating locations, this slide, in terms of the colours on there, what you'll see is the small blue dots are where we have outreach clinics today. That's again, to remind you, that's where the consultant travels to meet the patient for the first consultation. Should the patient then need any surgery or inpatient activity, they travel to one of the orange dots. Again, that's around 40% of our new patients. Those orange dots are currently independent hospitals, generally part of large groups like Circle and Spire, but also independents in their own right as well. That's where we're carrying out the surgery. The large black dots are regions we've highlighted where there's a heavy reliance on NHS provision, but also an under provision in terms of surgical capacity, be that NHS or other independent hospitals. So regions that are key for provision of surgical hubs to support inpatient activity, that being surgery. Back to you, Derek. Derek, you're on mute, Derek.
There we go. Sorry. So basically, operational overview. This company relies on number of patients, the number of patients that need to be seen. Do we have enough surgeons to operate on those patients? Do we have enough facilities to be able to operate on those patients? So first of all, if we look at patient demand, as we mentioned earlier, the waiting list is at nearly 8 million, and we are seeing a steady increase in the number of patients who are being referred to us. And over the last year, we've seen a 12% increase in demand. And this has been going on for years. This is how One Health has been growing organically over so many years. In addition, the use of the independent sector to provide elective care is supported by both political parties, and particularly so the Labour Party with some pronouncements from Wes Streeting. So we continue to see more patients. As we grow our geography, as I mentioned, we're at the top of North Yorkshire now, we're at the bottom going down to Leicestershire, and we will continue growing north and south from there. As we grow, we just simply grow into a bigger pool of patients to be referred to us. So traditionally, or certainly since 2012, One Health has received its patients with direct referral from the GP. But what we're finding now is that some trust hospitals have such a demand on their services that they cannot cope with the number of patients that they have on their waiting list. So we also supply the hospitals with a solution to that, whereby they refer to us their excess waiting list patients. So this, over the last 6 months, we've now contracted with 2 further trust hospitals, Barnsley and Derby and Burton hospitals, for the provision of mainly orthopaedic care. And that goes at that's now 4 hospitals that we're providing this care for. So we don't see any problem in this demand. With waiting lists so high, there appears to be no problem with regards to getting patients to see us. How about surgeons? Well, we work in areas where there is low private practice. We don't work in affluent areas. Most of our work are in more rural areas where there's under provision of healthcare. So as an example, in Rotherham, say, around about 6% of people have private insurance, whereas in areas of Surrey, it might be 90%. So there's not a lot of private practice. So there are lots of surgeons with lots of free time to spend working on NHS patients in their private time, if you like, rather than private patients. So we are constantly attracting patients. We've contracted with a further 15 patients recently. And at board, we always review our pipeline of surgeons that are joining us. And we have roughly around about 30 patients who are in the 30 consultants who are in the pipeline to join us. And again, as we increase our geography, we simply widen the pool of surgeons to come to work with us. And we're attractive because basically we do for surgeons what they want to do. They want to sit in clinics and they want to operate. They don't want to be bothered with all the administrative hassle of providing a health practice. And that's what we're able to do. And in particular, we're noticing a growth in spinal practice. So we're not seeing a problem with surgeon availability. We're not seeing any difficulty. Another point I might make is that lots of surgeons have formed themselves into little liability, little LLPs, wanting to do what One Health does, but without the infrastructure with regards to regulatory requirements, without the contracts that we have with the NHS, they find they can't, and therefore these groups will join us. So we do not foresee a problem getting surgeons. So with regards to the capacity, again, our capacity is constantly being increased. We are adding new independent sector hospitals, and in those that we're working with, we are increasing the amount of work that we do within those hospitals. We have a couple of hospitals we work with where we're about 40 to 50% of the turnover of that hospital. There are, however, areas in the country, as I say, we work mainly in rural areas where there's poor provision of healthcare. There are areas in the country where there's both a shortage of NHS and independent sector provision. And in those areas, they're the places that we're planning to drop in one of these surgical hubs so that our patients don't have to travel too far. So we'll continue to work with the independent sector. It's a very flexible and mobile model, but there are certain areas where both fail, and it's in those areas that we plan to drop our hub stuff. And increasingly, we're noticing that trust hospitals are coming back to us to ask if we can use an insourcing model so that we can take some of their spare capacity. So we have the independent sector, we have our own hub program, and we also have the potential to do insourcing in trust hospital stuff. And as we grow, we increase our clinics, we increase our number of operations that we're able to do. We are still maintaining a waiting time of some 6 to 12 weeks. So a bit more on the surgical hubs. Now, the first thing to say is these are not hospitals. We do not need a hospital as you may think of a hospital. All our work is done out in the community. All our consultations, all our diagnostics, all our rehabilitation. The only thing we need is an operating theatre and beds. So these are really stripped down surgical facilities. We plan to open 2 of these over the next 3 years. We have one that's going through pre-planning at the minute. This is a mock-up of that facility. You'll see on the towards the near side, that is actually a nursing home. We are not running the nursing home. We're doing this in partnership with a nursing home provider. We are not building this ourselves. We're not builders, we're surgeons. So we are also working with a builder who is building the nursing home, and indeed is a company that lies within the nursing home. So within that, the far end of this picture, you'll see is our surgical facility, and that's 1 theatre and 12 1 theatre and 12 beds. So the type of work we'll be putting through this is high tariff work, hip replacement, knee replacement, and certain types of spinal surgery. And because we're doing limited surgeries in these hospitals, we are very efficient and very productive. So we would plan to do, say, 6 joint replacements a day, whereas because of various constraints within the NHS, only 2 or 3 may be performed in a day. So these will be highly productive facilities, which is exactly what the government is wanting. Indeed, the growth of surgical hubs is something that's supported by the government and is also supported by the College of Surgeons. So we've identified, as Adam said, we've identified areas where we would like to build these. The first one we have has gone through pre-planning. We would hope to go for planning shortly. As to the cost, well, the cost is roughly 7 million. It will vary depending upon on land and planning or what have you, but around about 7 million. And through this, we believe we'll be able to deliver 6 million of revenue and 2 million of profits. And as I said, these areas are focused on where we know there is demand. So we're not going to open a hospital and then wait for the patients to come. We're actually dropping one of these hubs in areas where we know already there is demand. We're seeing patients there already. So we will be able to start pre-booking patients into this into our new facility from 3 to 6 months out. So we won't be waiting. And the other important point to make is the patients who will be going here are not patients that have been moved from other hospitals where we're working. This is additional capacity for an additional patients.
This is the current operation. You'll remember this pie chart from an earlier slide. So on the left-hand side is how we do things today, where we pay a percentage of the tariff to the hospital, we pay the theatre staff, and we generate a margin. On the right-hand side is the same pie chart, but the shaded area is effectively the margin we pay to the hospital today, independent hospital today, that we'll internalise. So in very, very simple terms, we make around 18% gross margin today. That'll increase by 12% to around 30%, very round numbers based on specialty and mix. So you can see the benefit financially of having owned theatre capacity. The other benefit of this longer term, and something we don't do today, is the ability to do our own self-pay. It's a highly competitive environment. You'll probably appreciate most private hospitals compete primarily for private work because it's so lucrative. But with a very efficient model that we will have in place with the hubs, we're able to undercut where required to achieve our own self-pay and ultimately private medical insurance as well, subject to accreditation, which shouldn't be too challenging. So it's a very efficient, no-frills solution with us being able to pass on that benefit to the patients ultimately. So on to some statistics. So this is half year to half year. So effectively key operational metrics for us at half year this year versus last year. You can see there's some nice growth across the board. There's nothing negative in those KPIs, I'm very pleased to say. So new patient referrals up 12%. Number of surgical procedures, that's inpatient activity, up 7%. Number of consultations, that's a combination of new and follow-up, again up 10%. New consultants, key to growth. We've brought in 10 in the first half of the year. Very, very pleased with that number. And reflects a change in the way things are working, where before we'd have to chase and pursue, now we're approached on a regular basis. That also means, of course, we can be very selective. We're able to pick the best, the safest, the most efficient, and the most productive to come and join us. Number of outreach clinics is constantly under review. That sits at 31 today. But we're always looking for areas where there's under provision, where we can put in a clinic and attract that first point of contact with the patient to then feed the surgical capacity further down the line. And a key growth area, which Derek's touched on already, that's happened since COVID, is the number of trusts approaching us directly to bring in patients from their waiting lists into One Health. So they've been to the GP already, been referred to the trust on their waiting list, then come into One Health Group, transferred out by the trust. And the feedback we're getting on that provision is excellent, it really is. And we see more on the back of that. So that's really a second avenue for patients to join One Health beyond the traditional GP referral through ERS. So yeah, very positive set of metrics, I would say, across the board for the first half of the year. In terms of the outlook, very clearly, delivery of surgical hubs in future years will boost growth and margins. To repeat Derek's point, this isn't moving patients into, this is new patients, new margin, new growth. We will, of course, continue to develop our organic growth, and we constantly find more capacity in private hospitals. Derek said a second ago, one of our biggest providers, we represent probably 40% of their turnover. They've just developed their facility and now offering us more capacity in the same site, as well as new sites we're finding as well. And we've got one coming on stream in January, a brand new site we've not been in before. So that organic growth will continue, as well as strategic growth through hub development in 25 and 26. As always, we have a progressive dividend policy. We pay healthy dividends, both interim and final, and there's no plans to change that going forward. It's a key part of our offering. And probably the most important point, the biggest change since sort of 2019, is the change in political view of what we do. I think it's fair to say that both parties have demonstrated openly. I don't know if anyone watched Laura Koonsberg this weekend, but both Labour and Conservatives, and even Lib Dems now, talking about the benefits the independent sector can bring to driving down that waiting list, which one of Rishi Sunak's key priorities at the end of this year or this term. Back to you, Darren.
Okay, so who are our competitors? Well, clearly one might think the NHS is a competitor, but we do not look upon it like that. This isn't an adversarial approach. We believe what we're doing is highly allied with what the NHS wants to do. So we're not a competitor. In fact, we look upon them as colleagues, and we work together to try and deliver patient operations to decrease the waiting list. So we work well with a number of NHS organisations, both the commissioners through the Integrated Care Board and also through trust hospitals, as Adam has just explained. Local hospitals, one might consider that we're competing with them, but we have a completely different business model. Our business model is to support the NHS. Private hospital business model is primarily for the higher paying private medical insurance and self-pay models. And they will have a proportion of beds that are spare, that they can't bring the high tariff patients through. And they're the type of beds that they offer to us. They could bring NHS patients into those beds themselves, and they do, but we're able to pre-package large numbers of patients in advance, and it's just easier for them to do it with us. So we don't compete with them because we don't do private practice. We're not going to, we don't do private medical insurance or self-pay, although when we get our hubs, there may be a limited self-pay offering. So at present, we don't see them as competitors. We see them as partners. Are there any other organizations out there that look like us? Well, we've not really been able to identify one. There was actually a similar one called Pioneer, which was bought by Totally about 2 years ago. But Pioneer had a different model to us. They had an insourcing model, which was similar to the model that Totally had, whereas ours is more of an outsourcing model. So we're not aware of any groups of our size that work in the type of area that we work with, the type of contracts that we have. As I mentioned earlier, there are lots of surgeons who bring themselves together into small administrative groups, forming a limited liability partnership. But they haven't got the contracts, they haven't got the regulatory requirements, and so we get them inquiring to join us. We've had 2 groups recently join us, a group of neurosurgeons and a group of orthopedic surgeons. I spoke to a group of urologists in the Northeast who wanted to speak to us to find out what we're doing. So we're constant, and Adam has similar approaches. We're constantly approached by groups of surgeons who try to do what we do, find they can't, and therefore join us. So Adam, over to you.
Thanks, Derek. So to anybody who's not come across One Health before, I'm going to show you 2 sets of results. Obviously interims as part of today's presentation, but also to reflect really on our last full year, that being 22-23. I'll talk you through the headlines on that as well. So starting with full year 22-23, again showing a consistent growth from 22 through 23. Revenue, EBITDA, EPS, all up. I think it's fair to say in terms of what I'm trying to show you is kind of consistent growth rather than just a one-off in this half year. So you'll also see a common theme there in terms of the net cash balance. We, as Derek touched on the very first slide, we generate a lot of cash. So year on year, we continue to grow cash, and certainly this year we're at 3.64 million at half year, which funds not only dividend but also future investment, and that includes surgical hubs. So bring you forward, bang up to date. So in terms of the interims that we've released this morning at 7 o'clock. So as with the key metrics, everything's positive, nothing's negative. Strong revenue growth again, gross profit underlying EBITDA, cash at £3.64 million, as I touched on. And we're declaring a higher interim dividend than last year. Some that's rebalancing, but net, it's an increase on last year. So we continue to pay increasing dividends, starting with interim, which we paid in January. Also, kind of the lifeblood of One Health Group, the new patient referrals there, nearly 6,100, up 12%. These are almost record numbers for One Health Group. So that is effectively funding future inpatient activity. You remember I said before that 40% of our new patients convert to surgery. A strong new patient number today in 8 weeks is a strong inpatient number going forward. So strong numbers across the board. And that's really where me and my team focus on is getting more new patients, more locations, more geography, more capacity to keep that inpatient revenue growing over time. So that's really the organic growth of the business in the last 6 months. Beyond that, we'll talk about strategic growth, which we've done already with the development of hubs. Back to you, Dave.
Okay, so in summary, One Health is part of the NHS supply chain, providing elective surgical services, which is all free at the point of delivery. We see our patients directly from referral from the GP through patient choice, but increasingly we're also getting patients referred to us by hospitals. We're popular. We see patients nearer to their home with very short waiting lists for surgery. And so it's not surprising that we get lots of referrals through the ERS system, the electronic referral system. The waiting times for us are far shorter than any NHS trust hospitals. And importantly, we care for the patients right through the clinical pathway. So we care for them from the delivery from the referral to the patient through to us, right through any conservative or operative treatments, throughout the rehabilitation and then discharged back to the GP. Our business model is light. We subcontract clinics and theatres, and so it's nimble and flexible and takes advantage of local facilities as we grow. And we've explained to you how that we've increased the number of the amount of capacity we get at independent sector hospitals, and we are constantly getting more hospitals as we grow our geography. However, with the addition of these surgical hubs, where there is a lack of capacity, we can further increase our rate of growth. So we are asset light, cash generative, with growing revenues and profits, and have a progressive dividend program. We're projecting a compound annual growth rate for the next 5 years of up to 40% per annum, with 2 surgical hubs projected for 2025 and 2026. So we feel we're in a sweet spot at the minute with regards to the health market. The NHS is in turmoil, waiting lists are growing, there are demands for restructuring. The political parties are supporting the independent sector in helping deal with the waiting list, and we can do that through increased productivity. So we only foresee a growing demand for our services over the coming years. Thank you very much.
Derek, Adam, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we've received a number of questions throughout today's presentation. Adam, if I could just hand over to you just to chair the Q&A, I'll pick up from you at the end.
Okay, no problem. A very early question presentation. We were asked, Derek, as you expand, particularly with the planned addition of clinicians and surgical hubs, what is the expected impact on the company's operational costs and overall financial health? I'd like to think we've answered that as part of the presentation as we work through it. So you will have seen that a lot of our costs are variable. So as we grow with more clinicians, because it's a variable model, it only costs us per procedure they carry out. So it's not like a fixed overhead where we need to recover that cost. Hubs admittedly are different. They will cost the business. We've got several hubs lined up over the next sort of 4 to 5 years, but certainly 2 in 25 and 26, 1 in each year. We expect to fund that through a combination of free cash. I mentioned a while ago that we got £3.6 million a half year, and that will be higher by end of year. So cash, loan, and maybe to fill the gap after a lease potential, a small raise to fill the gap. So we remain confident that any hub itself is self-funding. As Derek's touched on, they generate around £6 million of revenue and £2 million of EBITDA. I would suggest quite a good return on the initial investment to build or acquire that. The other thing we should highlight is that we haven't ruled out any acquisitions, not mentioned in the slide pack, but it should we come across an appropriate facility that happens to be for sale at the right price that matches our strategy in terms of being an area where there's under provision, we wouldn't rule out an acquisition as well as build and modifying existing buildings. So that's kind of part of the strategic growth. Any comments on that, Derek?
No, I think that you've answered that fully, Adam.
There are no more questions at this point. Does anybody have any?
I can see another question there, Adam, which I think is a question for you.
Apologies. Yes.
From David S.
I can see that now, yeah. So do you see the rates of growth around 48% at EBITDA level sustainable? What has driven this, and what visibility do you have going forward? So in terms of financial planning, we see continued organic growth. We see no challenge around that. The step change is the surgical hubs, as we talked about. So EBITDA will take a step change through development of hubs. The EBITDA year on year doesn't necessarily reflect underlying performance, because within last year's half year, we started to pick up costs of the IPO, which happened in November 22. So the EBITDA was impacted by that. So we haven't got that cost this year. The underlying EBITDA for this half year is clean, no adjustments, and probably better representation going forward. On to the next question. How are you navigating the regulatory environment, particularly concerning healthcare policies and compliance requirements? Are there any anticipated changes that could impact the group's operations? That's probably one for you, Derek.
Sorry, let me read that. How your regulatory requirements? Yeah. We keep up to date with any compliance changes and any change in regulatory requirements. we actually have a very robust infrastructure to be able to deal with this, and we have a very strong board, including non-executives that can deal with this. So we have not anticipated. This has been going on for the last 12, 15 years with increasing regulatory control, and it's something, because of our infrastructure, that we're able to keep anticipating and keep in advance. An example of that was a recent paper that we had to produce to explain our carbon footprint and what we were doing to bring down the carbon footprint. That was a considerable amount of work, but because of the infrastructure we had, we were able to deal with that without any undue problem, without taking too much time out of Adam and his senior team, basically, which is basically seeing more patients, doing more operations. So we're comfortable that we're able to cope with any changing regulatory requirements in the NHS.
Okay. So the comparative from consultations to operations there, one of the questions. So you have had 15,311 consultations to make 2,997 operations. Is this normal? The consultations number includes follow-ups as well, which are post-operative. So the real measure, if you like, is the new patients to operations, which I mentioned before is around 40% conversion. So I hope that answers the question. The consultation high number includes consultations after they've had operations. So it's new to inpatient is the real measure for it, around 40%.
And that's quite normal in surgery. Surgeons love to operate, and they would love it if every patient they see had been worked up so comprehensively that they all needed an operation. But that's not the real world. So whereas GPs and physios do their best to work patients up, there are always a proportion of patients that, when it comes down to it, having a full and frank consultation, it's best that they carry on with conservative measures rather than have an operation. So even at best, where patients are triaged extremely well, the figure will probably only get up to about 60, 70%. So it's not unusual to have that sort of gap between referrals and those going for surgery.
Just to answer Paul specifically on that one, if you go back to slide 16, the new patient referrals 6,094, surgical operations 3,000. That's almost 50-50. So that's a better representation of the conversion to surgery. That's actually quite high, but some of that will be lagged from last year as well. Bear in mind, it's a constant moving number because we're seeing patients last year and treating them inpatient this year. So 40-50% will always be, and has always been for a long time, kind of the benchmark number. So one from Christopher T. How important is technology to your strategy? What investment is planned here? That's a really good question, Christopher. So we are, I would say, almost unique in the fact that our outpatient experience for a patient is totally paper-free. All our systems are based on either a tablet or a laptop. So technology is very, very important to us. Equally, technology enforcing our security. Clearly, we deal with the most sensitive data in the country, that being patient records. GDPR is very, very high on our agenda, and we talk about it every board to make sure we're safe. So we're constantly embracing technology to make sure, A, we deliver a better service to the patient, the end user, our customer, but also security and data safety in our building is really important. So we're constantly looking at different providers, making sure our providers are fit for purpose, given the increasing demands of modern society. But investment, yes, it plays a strong part in the way we deliver our model and makes us much more efficient. Another good example, sorry, just thinking about it out loud now. So a while ago, we were submitting around 28,000 pieces of paper to patients a year, that being letters, say, your appointment, your follow-up, your inpatient consultation. We moved to hybrid mail around 5 years ago, and saved around £40,000 in postage and paper. So now have a system whereby when one of our team out front of house here sends a notification to a patient, they do text, email, and electronic mail. So there's no envelope stuffing anymore, which they used to be.
And just a further point on that as well, with regards to surgery. I mean, surgery, particularly orthopedic and spinal surgery, is constantly evolving with the technology. So these hubs that we will be building will be up to speed, up to date with the latest advances. So we'll have very efficient, very productive theatres. You may be aware of robotic surgery or computer navigated surgery. Well, we work with companies that provide this type of technology. So we will always remain at the cutting edge of surgical technology.
Okay. The next one, I think I've answered already, but I'll say it again for the benefit of anybody who missed it. How are you going to fund the hubs? As I mentioned before, we are quite cash generative. We set on a lot of cash, which is currently on deposit account, earning around 3%. So we'll use cash first. We've then got a very friendly bank who, so to just give you some dynamics on that. So we own the building within which we operate, which is our head office effectively, Derek touched on in Sheffield. Value is about 2.6 million market value. We've got just over $1 million loan against that. So our bank is very keen to lend a headroom against that. But also our bank is very much keen on our growth strategy and is prepared to lend multiple times that to help fund the hubs. So it'll be predominantly cash, or sorry, primarily, first of all, cash, then a loan. We're also looking at leasing with a couple of different leasing businesses and potentially a share raise as well. But that's kind of fourth in that order of events. It's not straight to a raise and see how we get on. Last question so far is, will the NHS allow you to make 30% hoped for margin on new hubs? Can they change the rate card? That's a very good question. So the rate card, for anybody who's not in the sector, it's based on what it costs an NHS trust to carry out that activity divided by the number of activities. So the rate card has been in place, I think, Derek, correct me if I'm wrong, for around 11 years.
Yeah.
It's tweaked every year slightly to reflect inflation. So a really good example of that would be the recent industrial action with the nurses, which was settled. Clearly, the consultants are potentially settled or going to be voted on for settlement. Junior doctors still outstanding. But going back to where we started, the nurses was the first strike we experienced. Once they settled, the tariff or rate card, as you referred to it, was increased to reflect that inflation. And we benefited from that directly because our cost didn't increase. So it's not a case of the NHS allowing us to make 30%. We're all paid the same. The difference with One Health, we're extremely efficient. The more efficient we are, the more margin we generate. And ultimately, it's about treating patients. It's hard to criticize a business that's seeing 12,000 patients a year and put them back into good health rather than sat on a waiting list. So we've not been challenged yet on margin, and it's accepted that we are efficient and we deliver a good service. I think that's all the questions. It's empty at the moment, so unless there are last-minute questions. I'd like to thank you for attending, Derek, and I appreciate your time. And hopefully we'll see you again on this platform, either at our year-end training update or year-end results. Thank you for your time.
Perfect. Derek, Adam, thank you for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of One Health Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.